Today's guest is Anatoly Yakovenko, the co-founder of Solana Labs. Solana is one of the most well-known and one of the largest layer 1 blockchains within the crypto space. Anatoly launched it back in 2020 with Raj Gokal and has been through the trenches and back, literally. Anatoly, we're excited to have you on the show today. Welcome.
Thanks for having me.
Thanks for being here. To start off, we always like asking our guests, what does crypto in America mean to you?
That's a great question. I think for me, I think it means cheaper, faster finance for consumers. Kind of, I think, competition for financial infrastructure, for financial services that results in better products, more robust products, low risk. That's kind of how I think about it. I think, to me, a lot of crypto is kind of the continuation of the growth of the internet and software, and this is specifically software eating the finance world.
Anatoly, I know you came to the US from Ukraine in the early 90s, and I remember you mentioning that Solana was named after Solana Beach, right? So, yeah. I mean, I would love to know kind of your journey here, and then kind of like back in, the time when you launched Solana, it wasn't really the most friendly in the US. So what made you and Raj decide to launch it here and also name it after an American city?
I mean, US is the best place to start a company. It's got the best engineers, the best talent, I think the best venture capital. So the best opportunities exist here. And it's my home, so I don't know where else I would do it.
That's okay. Fair enough. Yeah. Fair. Yeah.
Was there ever a time, Anatoly? I mean, obviously it's your home and you were compelled to stay, but I heard you mention recently, I believe you were on the All In podcast, and you talked about doing a fundraise, and you said it was about a $14 million fundraise, but of that $14 million, you had to give away $2 million in lawyers' fees. That was about 10% of what you raised. And that was during the Biden administration. So it was a hostile regulatory environment. A lot of your fellow founders did move offshore, felt like they had to, and they went elsewhere and they built. Was there ever a time where you felt maybe, okay, I'm thinking about leaving the US, or were you always bent on staying here?
Yeah, I've always been bent on staying. I think we were blessed enough to have raised enough to cover this overhead, which is really substantial. I think most startups shouldn't be thinking about spending 10, 20% of their runway on legal fees just to launch the products. There's exceptions, obviously, if anyone working on healthcare is going to have a ton of overhead on that side, but for software, it doesn't make any sense. And it's been a huge blocker for founders. And during, we launched and kind of all the growth happened afterwards, like the 20 through 2025. And we constantly run hackathons to try to onboard new founders. And we saw just a dramatic shift of the number of founders that would raise capital. Used to be, I would say, 40% to majority based in the US, but then every year it started shifting to more and more outside of the US. And, these small companies start small. Like, it doesn't seem like any one of them is significant. 2 or 3 people, they raise their first 1 to 2 million seed round and to build a product. But this is where innovation comes from. This is where big companies come from the small ones eventually getting product market fit and growing and creating in bigger and bigger companies. So it's just been kind of sad to see that talent and the capital leaving the United States, especially since I'm in Silicon Valley, I'm in the Bay Area. We had, in the early days, we'd have meetups and I would see dozens of other founders in the same boat as me. And slowly but surely, like, folks would just kind of start spreading out and leaving. So kind of disappointing.
Yeah, I want to ask you about that capital formation process. Obviously, it keeps the lawyers busy, and we're thankful for that line of work. And obviously, you guys have some great folks on the team over there. But in terms of capital formation in the US, I feel like the traditional startup model you're talking about, a lot of that was just solved with the SAFE, right? Like, that's very low friction. YC, did some document sort of innovation there. Crypto hasn't really gotten to that moment. You guys started building, I think, kind of at the height of the ICO craze, and that looked like maybe that was going to be a really quick capital formation path. You guys didn't go ICO, back in 17, 18 when everybody else was, and obviously the environment has changed. a lot since then, but you guys are also active on the investment side yourselves, right? With Solana Ventures. How do you think the industry can improve on just this really basic like capital formation process and making sure that builders have enough capital to build without, spending millions of dollars setting up all these complex structures that the industry requires?
Yeah, I mean, when we raised, and I think a lot of the ICO companies, when they raised, they used a SAFT, which was basically a copy version of the SAFE, but for tokens. And that model, I think, worked really well when you had, this is excluding all the regulatory overhead of just launching the product, but in that just early capital formation stage. The SAFT works well when you have a clear separation of the company that's building it and the protocol, and having all the value accrual clearly going to the protocol instead of the company that is building it. And this is where I think there's a lot of tension with building companies and protocols in crypto, is that while protocols, I think, get the largest market cap share in the crypto industry, in the early stages of company formation and kind of ideation and iteration, you have no idea if this protocol is going to have PMF and whether it's going to work, right? And whether all the value accrual assumptions you're going to make are actually going to play out. And that's been, I think, a huge part of the challenge. So I think where it's landed now is usually people raise some kind of like equity with warrants to buy the token when the token launches. And I'm kind of not, it's okay. I'm like not a huge fan of this. I would rather see just a clear, SAFT model. And we have all these exemptions in the SEC regulation, Reg A, Reg CF, Reg D, it's this alphabet soup of things. Reg S is the one that almost everybody uses to do the raise because it excludes Americans. It's much simpler to implement.
Convenient.
Yeah.
What I would rather see is just make Reg S available everywhere to everyone. You still have your primary raise. You still have to, if you raise $1 million, you have a small amount of disclosures. If you raise 100 million, you do more disclosures. But afterwards, if the company wants to have a token, that raise could just convert to a token and just be traded around on the secondary markets without any restrictions. And to me, that would really satisfy kind of the interests of the regulators to minimize fraud and all these other things, and allow for capital formation to have flexibility in how the company forms and how it finds PMF, and whether value accrual goes to the equity company or to the token itself.
I wanted to ask. No, go ahead. I was just going to say that's a really interesting sort of set of choices. Like you obviously stayed with labs, but in a lot of projects, the value does accrue to the token and the foundation. There's also this weird notion of fiduciary duty that lawyers kind of, there's sort of just this kind of implicit agreement that the founders are going to focus on the protocol where the value is accruing, not to the equity, but to the token. And all the investors are just like, okay with that. It's a very interesting kind of set of circumstances.
So we were lucky that a layer one, actually when we started, people didn't know how layer one's going to have any ROI or have any value accrual. And I think we were lucky that proof of stake networks specifically have this very clear value accrual mechanism through, tips for creating blocks and including transactions there. And that actually has enough PMF where it's substantial and can justify, the valuations and the growth. So, and that works out great. We did a SAFT. We did everything we could to make the network in its decentralized form as successful as possible. And the entire ecosystem kind of ran with it and made it what it is today. And that's been great. But a lot of companies building on Solana don't have that flexibility, because in those early stages, you may have an idea of how a protocol should work and how things should work out, but the markets may not agree with you, right? Your ideas may fail and things like that. And you turn out to end up building a great equity business, and you end up with this really misaligned incentive, which I think is problematic long-term. I think for long-term, great capital formation and formation of great companies, you need all those things to be aligned. How capital is formed, the investor rights and value accrual, all those things to be aligned, like they mostly are in the traditional financial markets.
Mm-hmm. Yeah, you said capital. We'll get into internet capital markets in a bit. But before we go there, Toly, I want to ask you kind of like the journey for Solana. I know at the beginning I joked about coming back from the trenches. I've been covering Solana since 2021. So almost, its inception. But, it wasn't always an easy journey. And it's easy for teams to talk about how great it is now that they're succeeding, etc. I mean, like, look at Polymarket. I saw like Shane Copeland post a photo of like when in 2020 he was like working out of his bathroom, and now he just got a $2 billion investment from ICE. So it's easy to be like, oh, they did it, But like for you guys, what do you say to founders when they ask you how did you do it and what that was like?
Yeah, I think none of us had any idea we would be this successful, and I still don't feel like we've won anything, and it's just infinite amount of work. I think that's kind of maybe a common thread between founders, is that you never feel like the job is done. So you're always feel, you're in between these two states where you're either feeling euphoric and everything's working well, or you're in the brink of disaster and death. And I don't know if that ever changes for
which one are you feeling right now?
I think I'm probably closer to the euphoric side, but on the engineering side, there's so many things that I want live already. Like, so I'm more stressed out about that. Yeah, it just never changes. This is where all those gray hairs come from.
They're well earned for sure.
Yeah.
Do you have what's your, I guess, biggest piece of advice that you give startup founders who come to you and say, how did you do it? I mean, similar to what Jacqueline asked you just now, but is there one thing that you say, always do this or never do that?
I think, well, like the things that I did was, I think, hiring. And this is the biggest advice that I could give to early stage founders, is that you can't solve a problem with a hire. It's usually like you don't overhire. And specifically how I constrain hiring is, this was an engineering project. So I'm an engineer, and I would hire people when I was working on something and I knew exactly how I could do it. And I could scale myself. I could take the work that I'm doing and hand it to this hire. And I could also interview for that specific task. So one, because I was working on it, it was important. And two, since I knew exactly how to do it, I could evaluate the hire in the first 90 days and figure out if they're a fit or not in this kind of startup environment. And then I could go work on the next unknown thing. And I think a lot of early stage founders, especially folks coming from big teams, big companies where you have kind of infinite human resources, they get into this idea, like you need a team to work in this problem, or you need this management structure, or these things that they're used to maybe at Google or Microsoft. It's just not how startups are formed. You basically have to do everything yourself. And if you over-engineer, over-hire, you end up moving a lot slower than the market requires. You can't pivot and you can't change direction really quickly. And you burn through your runway much, much faster if you overhire. Yeah, I think this has been, maybe Solana more acutely experienced some of the ups and downs over the last 5 years, but we've always just kind of kept the smallest team possible to get things done. So during those ups and downs, I was never worried about our runway. I felt, okay, we have 36 months of runway. We could go build all these product features and we can win on product and the cycle will turn around. So having that as just always gave me confidence. And I think that's maybe like one of the big reasons why we've been able to succeed.
Bitcoin might sound complicated, but the Gemini credit card makes it simple. Use it like any credit card. Buy lunch, gas, or your weekly groceries, and you'll earn up to 4% back instantly in Bitcoin or one of over 50 other cryptos straight to your account. No annual fee, and right now you can grab a $200 Bitcoin intro bonus. It's the easiest way to start building your Bitcoin stash. Go to gemini.com/CIA to learn more. Terms apply.
Yeah, I was going to ask about that period of sort of the peaks and troughs, right? The highs and lows. I actually was GC of a project that was spun out of labs by Ryan Shea back in the day.
Nice.
Nation. Yeah. So was part of, I think, that very, very high. Like I know everybody has like a where were you for that break point that year when FTX started its sort of a precipitous slide. But one of the things that was really interesting is working with teams who were building on Solana in that time. I think it's given you guys like a really interesting moat, because there aren't a lot of founders around with live protocols who've gone through a bear like that. What do you think was so sticky about Solana in those like really, really difficult times? And like, you know, how did it feel to put on that like silly dragon costume and declare, we're so back, right? Like what was that like? I mean, for you and what did you take away from that?
Yeah, when FTX collapsed, I was flying back from Breakpoint, and we had a great event. There was every Breakpoint that we've had at kind of the largest number of attendance. So it felt like everything's growing year to year. Developers were, giving me hugs. Everyone was focused on building. And on the plane ride back, FTX basically blew up just during that entire flight. So when I landed, it felt like the thing that I was most terrified about was that a lot of the teams that have raised capital on Solana kept it on FTX to generate yield and stuff from their stablecoins. So if all that runway was gone, evaporated, I think that would have killed the ecosystem. But luckily, it was a pretty small minority that did so. And out of the folks that did get screwed, like Armani and Backpack just raised a seed round at that time, and they kept all of it on FTX. Because Armani was a FTX employee, like felt confident in the platform. And it was pretty crazy to see, but during the 6 months that followed, he just doubled down, and him and a small team, they were planning to hire a bunch of folks, but they just worked harder. They didn't hire people, they just worked longer hours and iterated much faster and built products and had the Mad Lads launch and the wallet. And to me, that team specifically felt like the whole turnaround story for the ecosystem, because everyone that stayed just hyper-focused on product development, hyper-focused on finding within their small group of power users, what they actually wanted in the product, how to improve it, and just shipped and iterated. And those teams effectively brought the ecosystem back. And it was, Mad Lads and Backpack and Jupiter and Jito. And when I talked to them and asked them, like, why didn't you leave and things like that, the most common response was that it was the least worst blockchain. Basically, the alternative was all these systems are like suck because they constrain the developer too much, right? You're dealing with Byzantine fault tolerance and all of these things that add so many constraints, but we've done kind of the best job out of giving developers the most amount of resources and capacity to kind of go build products. So to them, it felt like either they go build their own chain or they stay in Solana. And vast majority just stayed in Solana and kept iterating and building better products.
Yeah, it's interesting that you brought up Armani, because I've been following his story for a long time too, and they just acquired, or not recently, but like earlier this year, FTX EU to expand their own European arm. So it's literally full circle. They adopted the company that almost killed them. And
for
so
sure. Yeah.
it's just a crazy, crazy story. And I feel like even for Solana, you guys kind of rose from the ashes. I've seen the headlines and everything. And I mean, you've experienced it firsthand on that front, but it kind of goes to speak to like when you're building a community, it has to be extremely strong and resilient. And the fact that they stuck around throughout, the highs and lows is extremely impressive.
And speaks to a product that you built, kind of during the hard times.
Not
right?
bad tech.
Not bad tech. Anatoly, I want to talk to you about the Solana ETFs. We're about to see Wall Street debut those in a couple of days, couple of weeks. I think it kind of all depends on the government shutdown at this point. But, these Solana products will likely come with staking, which will be a first for the industry. Do you think from your perspective where you sit, are you thinking that these products, when they come to market, will they be more appealing to an institutional perspective or from a retail perspective? I guess in terms of adoption, what are you hoping to see there?
I mean, that's really hard for me to say. My dream is everybody's self-custodies and runs their own nodes and stakes. But I think the reality is that we have this great financial system that's been built over the last 100 years, but really way before the internet. So it's really been built, I think, or in the first 50 of those 100 years. And it's very robust, but it is kind of like based on paper and faxes and like very, very hand to hand. And crypto has been completely reimagined finance on top of the internet from first principles, which I think is where that tension comes in. So products like the ETFs and the DATs, in my mind, like the way that they serve is it's almost like a API interface between Wall Street and their compliance and all the work that they need to do to interface with Wall Street to crypto. So if you have, a really great ETF products that did all the compliance work to get staking and JITO and everything else running as part of their system, that now becomes this really simple interface for Wall Street to go and use that particular thing. Otherwise, every hedge fund, every Wall Street company would have to go through that same compliance work to go figure out how to use staking on Solana, which is a ton of overhead, right? So to me, it seems like these products have the ability to simplify all the work that Wall Street needs to go and like actually participate in Solana. And with that's probably even more so because those are actively managed companies. They can change strategies. They can use JITO one day, maybe some other protocol the next day, and then Camino or whatever else. So you can even have much more iteration, much more active participation in Solana while still having that compliance layer for Wall Street to interface with. Whether there's demand for it, I think, it largely depends on how good of products people launch on Solana, how much PMF they get at the end of the day.
Mm-hmm. I'm really curious about, as a general purpose L1, like balancing that narrative, right? I think it was a few months ago now, but Sergey from Chainlink came on and we asked, where's TradFi and all this? And he was like, they're here, right? And you mentioned sort of there's this internet capital markets narrative that Solana has adopted. I think there's a lot of other, Say, like has this markets move faster on Say, right? So we've seen a lot of L1s lean into this narrative, but you guys also obviously, like, shout out 00 just got, a DPIN no action letter. You guys have a huge DPIN community with Helium. How do you balance the focus on the liquidity and the sort of institutional maturity that TradFi brings to the space while still letting sort of general purpose L1 like builders just build like weird things, right? Like how do you think about that in terms of where it takes you as a founder?
The thing is, like, we don't have to do much. This has been probably the most understudied part of crypto is, neither me and I guess, I don't want to speak for Vitalik, but from all appearances, he's not a business guy. I'm not a business person. Mm-hmm. But these ecosystems have been able to grow like massively because none of it is blocked by the founder or the founding organization or the foundation or any of that. If you can keep those organizations small and lean and kind of just focus on unblocking other people. And this is where I think the best, I would say, crypto foundations or companies execute is not in building their own products and trying to do everything at once, have institutional support and all of this. It's just simply find a founder that's got vision for a product that can interface between those two and unblock him and get him off the ground. And that may mean figuring out what regulators they need to talk to or what lawyers or how helping them raise capital and things like that. But ultimately, the way that these systems work best is if you have a bunch of founders with their own interests go fight for it. And that's kind of, I think, been working really well for decentralized systems. And I think is very unique to like a very unique structure that's very different from a traditional corporation that is very centralized. I would love to see like actual like a bit more like academic study about why these systems work and how they're able to keep growth together and have value accrual together, even though there isn't a single, decision maker for any of those.
Anatoly, I know you've said in the past that one of Solana's real strengths come from the on-chain activity, and there's definitely tons of that on Solana. But now with Wall Street coming on board through these ETFs pending and staking products pending, or I guess already happening, do you kind of worry about Solana becoming like too financialized on that side of the world? Or do you think the technology side of it will actually just continue to grow and prevail alongside of it?
To me, financialization is like the absence of politics, is when you can actually make decisions clearly. So I'm not opposed to it. So financialize all of it, as far as I'm concerned. Use a futarchy for all the decisions.
Yeah.
I think that is actually like a net good if you are able to do it in like a secure way, right? If you can eliminate the risks, then I think it's awesome. And crypto allows us to actually do this at scale. You can use DAOs and things like that to eliminate a lot of the risks involved with these systems. Mm-hmm. So I think like the thing is that, like, again, Wall Street and all these other institutional providers, they're rarely the drivers of innovation. Like, it does happen sometime. Like Robinhood, I think, has been awesome and is a major driver of innovation. But these are all like, you don't think of Robinhood as like traditional Wall Street, right? These are all kind of the disruptors, Robinhood, Stripe, a bunch of these folks. So as long as there's room for disruptors to grow and build, I think it's fine. Like, it's all good. Bring it on.
Yeah, there we go. Dolly, you've said it. I've said it. Gerald has said it. We could get Ellie to say it. Internet capital markets.
Internet capital markets.
Can you please describe to us what this is? I think we're familiar, but maybe the people in our audience doesn't know. And obviously, it's a huge push within the Solana ecosystem, right?
The goal of it is to, I think people look at it from a lot of different lenses, but my view on it is very practical. Like, over the next 5 years, what can we accomplish? And to me, what I would love to see is like the Linux from scratch version of an IPO. Like, a founder that knows what they're doing or wants to do this can use a open source smart contract that's immutable for their direct listing, have all the disclosures and the code in their S1 running in a public permissionless blockchain, and launch their equity publicly to the public markets directly on chain, to where that token actually represents the source of truth for the cap table. So none of the transfer agent, brokerage, all this stuff gets compressed down to just immutable software. All the investment banks, none of that stuff needs to exist, because you can literally use an incentive in a automatic market maker for the price discovery process and just let it go. And that doesn't mean that every company is going to do this. In fact, the vast majority will not. They'll use a third party. But because it's available to anyone, the fees and the costs to do this should basically dramatically shrink to the cost of, the value provided. I'm sure you guys have seen the Figma IPO, but the amount of money the difference between what the company got and what retail investors paid was like basically 10% of their current market cap. That's ridiculous. You cannot give up 10% of your company just to do a single transaction. So this is kind of like what internet capital markets means to me, is taking all these financial services and layers in capital formation and reducing them into software and letting the fees and everything else collapse.
Is this something we're seeing at a global level as well? I mean, this sounds like something that you guys are looking to implement stateside, but is this something we're seeing in any other market in the world at the moment?
I think US is just the leader in terms of public companies and capital formation. So in my mind, when it happens, it's going to be kind of led by United States. Mm-hmm. And because, ironically, I think a lot of the financial systems were built in the US before the internet, we kind of get to leapfrog everyone else.
Yeah. And this is helped on by, I'm guessing, the SEC's push for Project Crypto, right? Which kind of not accelerates, but works with companies and, I'm guessing initiatives like Solana Policy Institute to implement ideas and initiatives like this.
Yeah, Paul Atkins and Hester Pierce have been awesome. It's just really night and day. And it's been great to see. Like the no action letter for 00 like blew my mind. I was like, why couldn't we get one of those?
A little too late, but for all the right reasons, right?
Yeah.
I guess also, maybe this is a dumb question, totally, but is IPOing in the US just like too hard? And that's where you kind of see the opportunity here too, for these like on-chain ICOs and tokenized equities to really just exist within, blockchain technology, opposed to, like you said, the traditional markets or the rails that have existed to date.
Yeah, I mean, I think we've unfortunately seen probably the lowest number of IPOs in the most recent years than any time in American history, which is like a pretty bad sign. Those early stage, you have OpenAI private at 500 billion, SpaceX private at some crazy amount too. Those companies should have been public because part of the American dream is having access to those early companies that are super promising, that are going to build the future, and being able to invest in them. And that is just not happening. And I think that's really unfortunate. And there's a lot of factors that go into this, but I think part of it is that the regulatory overhead of going public has become so high that just companies don't see the point if they can raise capital privately. So this is something that I think could change with crypto if the SEC and Congress maybe comes up with the right rules to make it much easier. But I think I'm less worried about the big companies like OpenAI and SpaceX are all going to be fine. But
they'll be
it's these early stage companies in those early days of capital formation and building a product. I think this is where if you simplify the rules for them to issue company equity on chain and have that be traded across decentralized markets, I think that could have really tremendous impact. Those companies will eventually become one of the big ones.
Yeah, I'm curious how you think about that in terms of governance too, right? Because that's a big factor in staying private is, look, if I have access to capital, why do I need to go do my 8Ks and my 10Ks? And, why do all that if I can have the capital and stay private? The easiest way to build a road is, like the king says, build a road, right? But like Solana has gone through this journey. You mentioned all the teams and sort of the distribution of the network. So do you think that will play a part in the way some of this rulemaking and legislation comes out? Like, are we going to see these sort of, I think there was a challenge around the FTT token specifically, right? Where it was like, okay, it's a token, but all it really is like synthetic, like FTX stock. So how do you think about governance in this new era of like internet capital markets and, token holders being shareholders and all that kind of stuff?
Yeah, I think there is a clear difference between protocols where the token and its functionality is purely defined in software. And then companies that issue tokens and then do buy and burn or some other, value capture mechanisms. So those are, I think, very separate things. And it's pretty clear with layer ones. The problem is when you get into applications, it becomes less and less clear because the breadth of the protocol is really application defined and kind of open-ended. So how do you draw the line? I think, I'm a believer in free markets. The best bet to do that is actually let free markets to figure out. And the best thing that the SEC or Congress could do is just simplify the rules to target where malicious activity could happen, which is in that primary raise process. If the company is raising money, it doesn't matter what they're selling. If they raise $1 million, they should have fewer disclosures than somebody raises $100 million or $1 billion, and kind of let the markets figure out whether they value how that token interfaces with the business proposition that that company is pitching. That would be the simplest way, and I think would basically cover all the bases. We'll see what happens. government works in mysterious ways.
Yeah. Are there any specific non-Web3 companies that are kind of coming and talking to you guys then about this and wanting to do exactly what you just discussed and, you know, essentially launch an IPO on chain?
I think so far it's been crypto or crypto adjacent companies. Like Galaxy issued their token on chain. That was really cool. And there's been funds that have done this, kind of like BlackRock's funds and Apollo's, that are, you know, basically equity, you know, or funds that are exposing that asset through a real world asset to crypto users. From a very high level, that's all you know, if you have a normal business and you want to expose your business revenue to users, you can issue a token against it. That should be just doable, right? But I think in these early days, we're still seeing mostly crypto focused companies working on this.
Mm-hmm. Yeah. I wanted to just talking about the lack of companies going public these days just reminded me of a stat that Paul Atkins said at the SEC crypto roundtable the other day, or I'm sorry, SEC CFTC roundtable. And he said that we have half a number of public companies today as we did 30 years ago, which is a wild stat. But basically he was like, I want to make going public cool again. So we'll see if you can do it. But maybe if you can't, then this is the other option is going public on chain.
Solana can make it cool on chain. Yeah, there you go.
Anatoly, you mentioned policy and Solana Policy Institute. I think, in fact, I think I brought that up earlier. But just kind of on the topic of, you know, Solana now actually has a whole policy group dedicated to it in Washington, D.C. I'm curious to know how much time you actually spend on the Hill, if any time at all. And do you feel that SPI is doing a good job prioritizing the policy needs of the community?
Yeah, I think they've been doing a really good job. And like, what's great is I think their interests or their intent that they're basically aligned with making sure we have free markets for decentralized assets. So from my perspective, I think they've been doing a really good job. I don't have to go to Capitol Hill. I think they kind of wheel me out to shake hands and kiss babies.
You get your photo op. Yeah.
Yeah, exactly. But when I do talk to folks from government, I just try to be a resource and explain to them, okay, this is how this thing works. This is what a validator does. This is why it's all in software and protocol, and kind of the idea that why these systems are secure without anyone controlling them, kind of going through the details about where the attack vectors are and kind of help people understand at the basic principles why these systems solve a lot of problems that regulation tries to solve, but can never really solve it completely.
Yeah, I'm curious on the lens of visiting DC in this environment versus previous administration, right? Like there was a big shift, I think, especially for L1s from like, leave us alone, don't pay attention to us, we're just technology, to sort of being asked actively, like, what do you want? And as a founder, I don't know if you had many of those meetings in the previous administration. I doubt like the door was quite as open, but do you find it, how do you feel sort of going and being a bit of a celebrity on the Hill like that? That seems like very, you know, almost going from like
people take your autograph.
Well, going almost from like non grata to, you know, you know, he's here, right? Like it's got to be an interesting shift.
No, I mean, like these folks are really busy. And everyone I met so far has been pretty normal, which I think kind of explains a lot. It's just a bunch of normal people tasked with solving really, really hard problems. So I think that's kind of like my impression of government, and they're really busy and tired and overwhelmed and doing their best. And I think their goal is to actually do the right thing, figure out what is the set of where Congress can actually have impact, where the regulators can have impact and kind of get stuff across the line. But it's a complicated process because even, you know, if you're on one side or the other and you may agree with this particular policy, you're actually horse trading with the other side for a whole bunch of other issues to get done for the entire year. So even though you have bipartisan support for getting crypto legislation across the line, you're trying to horse trade on some other issue that's totally unrelated. And that's fine. That is how the process works. And it's a competitive process, and probably the best you could do with normal people involved in government. And, you know, it's like the least worst system out there, right? As far as I'm concerned. I think, yeah, so I don't think they think I'm a celebrity. Like, I think they're way too busy. They don't like, yeah.
That's all right.
No one's
Fine,
really
you're not.
impressed. Yeah.
At least they know who you are, right? That's a good thing. Right, yeah.
Yeah.
In a positive light now. You don't want them knowing who you were a few years ago. Okay, moving on from government talk. We're always talking about that on the show. We have you here, Anatoly. So from your perspective, you're at the labs, you know, you're probably talking to founders all the time. There's obvious sectors that are excelling on Solana, but what about the not so obvious ones? What do you think are specific use cases or sectors that are really overlooked on Solana that are like moving and growing in silence right now?
I think there's a lot of deep-in projects that could use some love, and people are just not aware of. Like, I think most folks might have heard of Helium, and this is effectively a protocol for creating a decentralized wireless network. So anybody that wants to can go deploy 5G cell tower and participate in this network and provide wireless connectivity, and you get discounted, you know, a phone service because they're able to use your local internet coverage to kind of route all the calls, which is really, really cool. So it's effectively competing with Verizon, and I think they have the cheapest phone plan right now in the United States. So that's maybe the biggest deep-in project, but there's a bunch of other ones that people have never heard of. Like, one of my favorite ones is Hive Mapper, and this is a similar idea. They have cameras on cars that, you know, your Uber driver or your like DoorDash driver can install in their car. And they basically create a high fidelity map of your city that is similar to what Google Street View does. But this is all decentralized, kind of crowdsourced imagery. And they think they're at like 35% of the world's roads, not just United States, but globally of the entire world's roads that they have coverage of, which is really, really cool. So I would hope folks that actually want to see this technology have meaningful impact into like stuff that they use on a daily basis to go check those out. I think those are kind of some of my favorites. I think over the next 5 years, kind of with the Genius Act passing, people are projecting anywhere from $1 to $10 trillion worth of digital dollars being minted across public blockchains. So all businesses adjacent to that, I think, that people even have thought of can be built. Like, you should start thinking about that as a founder and building them now. Payments has been, like, I think, one of the hardest nuts to crack because it's such a network effects problem. You need to have enough merchants with that particular payment rail with enough users to go actually use it. But in my experience, so we, one of the labs products that I'm working on is Solana Mobile. We built this device called Seeker. We did a pre-sale, and half of the pre-sales went over just stablecoin rails, just USDC.
Yep.
And that was, I think, half of about like 80 million in sales. So that particular portion saved us like 2 engineering salaries worth of fees. So if you're a merchant that is doing a lot of sales on the internet, you can already kind of start experimenting with these rails and start deploying them.
Yeah. On the Seeker front, I actually got to test out the phone. I'm pretty sure Ellie also got a phone.
I got a phone. Full disclosure, Toli, it's still in its box. I got it at Salt, actually. It was given to me. I have a question, though, but I'll let Jacqueline go first.
No, all I'm saying is I tested out the Seeker device. I spoke with Emmett Hollier on my podcast as well, the Talking Tokens one. But I remember when Saga came out, and I know your Twitter bio says like you're an award-winning phone maker, which I think is a joke based on, you know what I'm talking about. Who was that YouTube guy who made that comment?
HP.
Yeah.
MKHB Marquez. Yeah, he gave us the worst phone of the year award.
Yeah, exactly. Hey, an award is an award, right? Yeah.
Exactly.
I think those things also paid for themselves, but
yeah,
I don't know if
the Saga phone eventually did sell out, and then you guys launched Seeker, right? So, and then there's a whole Solana Mobile division, and I know you worked at Qualcomm in the past. For our listeners who didn't know that, so it's kind of like a full circle thing for you, right? What is kind of the goal here? You want to just keep making award-winning phones, or what's the deal?
Any computers in your future, Tolly?
Most improved phone award is what I'm gunning for.
There we go.
No, I think technology goes through cycles, and the way I look at it is there's, and every 20 years you get like 1,000x improvement. And we're right about the 20-year timeline for iPhone. And I don't think you can build a better phone than what currently exists in terms of it's going to be so great that people are going to drop iPhone and Google it and switch to it. But it also means that these companies are kind of saturated. They're at their peak and they're building a continuously like a product that's becoming more and more a commodity. So it is actually kind of ripe for disruption. And the angle that we're taking is that the moderation rules and the crypto integrations on like the Google and Apple side are just so incomplete and so far behind like what could be done that to me, that's an opportunity to go and drive a wedge in these kind of two big ecosystems. The cool thing about crypto is that we don't need 100 million users to be competitive because crypto users are so active and such high spenders on the internet that 1 million devices of actives that are active crypto users is a better distribution channel for developers than the general purpose like internet or public stores. So we're like, I think altogether maybe close to hitting 200,000. So I kind of see like a line for us to get to 1 million. When we get to 1 million, it's going to be insurmountable to get to 10 million, but we'll figure it out.
Yeah, fair enough.
Yeah, I want to ask you about that sort of developer environment. If I could try to get in a little bit in the weeds here. You guys obviously are, Rust, and there was this like eating glass sort of phase of Solana, and I think it was actually really good for your community, probably long term in terms of being really sticky, right? Like once you're building on Solana, you're building on Solana. There's been sort of a dearth. I think it might be a meme. Like what the world needs is another L1 right now, right? But you see, a lot of different network approaches coming out trying to do the same thing, right? Which is like low latency, low fee kind of environments. How do you think about other approaches that L1s are taking compared to what you guys are doing at Solana with trying to get Fire Dancer and even like needing a technology like 00 is just a fascinating like technical sort of achievement to me. But how do you think about sort of the other kind of L1s and the sort of technical discussions in the space, given where you guys are?
I think you're going to see like the reason why there's going to be more and more L1s launch is because the opportunity to kind of build that single financial layer for all of the world is so huge. It's just massive, right? Think of like Google's how much market penetration Google has with search. There's like an estimate, I don't know, 50 to 150,000 searches per second that they do. That covers the entire world. You can actually build a blockchain that can handle that many transactions if you have demand for that, and you can cover the entire world and handle all of the users' demands for finance. And if you can capture the top 100,000 transactions per second by value, that is going to cover 99.9999% of the most valuable financial transactions on the planet. And that's a massive opportunity. And the technology is there to go and build it, and it's possible. So until you have kind of one chain that wins that majority of that pie, I think you're going to see more and more competitors launch. The thing is that we were blessed to compete with systems that were very inefficient and very slow, so we could stand out. But now I think with every new L1, you're competing not just with the Ethereum and its ecosystem, but you're also competing with Solana's and a whole bunch of other tail end of competitors. So it just becomes harder and harder to stand out. But design wise, I think, the idea of what, the engineering design of Solana basically won. Everyone that's building a new blockchain is building a, parallel execution, low latency blockchain.
Totally. What would you kind of define as crypto's next massive era?
Oh man, I think
Aside from stablecoins.
we're living in the stablecoin life right now. Yeah. What's next?
I've described it as we started with the punks, and we went to the hoodies. That kind of built a lot of stuff. I think I consider myself kind of more of a hoodie, between a hoodie and a punk maybe. And then now we're seeing the suits.
The dawn of the suits. I love that.
We're at the dawn of the suit era.
And that's all we saw. And then it went black. What comes after suits then? It is suits. That is the era.
Suits all the way down.
Yes. A lot of legal fees. That's what. Yeah.
No, I mean, it's a good thing. It means the technology scales up to cover large amount of consumers and create value for a lot of people. Reduce costs and things like that. So I think it's ultimately where you want to get to. You want to, I want to build stuff that people use because they want to use it and it, helps them. So I think we're kind of entering that stage where we're seeing, mainstream consumer adoption, and it's probably going to be driven by stablecoins. If we do actually get to, trillions of dollars of digital dollars minted across public blockchains, that's going to drive a ton of consumer adoption.
I want to ask about sort of the mainstream adoption versus sort of this like hyper financialization, right? So you mentioned it earlier, like maybe not everyone should be trying to IPO on chain. I kind of think the same thing about something like not everybody needs to be trading derivatives, right? But there is this basic technology layer that should kind of eat the world. How do you think about explaining sort of the next phase of crypto to this mainstream audience that's coming in?
It has to kind of actually deliver measurable value to those folks or force their existing companies to adapt and provide more value. And this is probably going to be the clearest again there's this big fight, I think, over yield bearing stablecoins or rewards and things like that. And all the banks don't want it because they're giving their savings account yield is like 0.5%, while they're getting 5% from the Fed. So they're collecting this massive 4.5% spread, which is, insane. To me, this is why consumers should care, is that if there's a credible competitor that forces those saving rates to go up because otherwise users will switch, that's the value that crypto is bringing. It's actually forcing competition to improve products, not just in crypto, but across all the market segments that it's competing with.
Well, aside from that and everything else we've discussed, Anatoly, is there anything else that you're watching that you think others should be paying attention to right now?
The Eagles? I don't know.
I thought you were a hockey guy. I guess it's not hockey season yet.
It's not hockey season. I'm probably more of hockey and basketball than NFL. But yeah, I don't know.
Should we get a Joel Embiid take here? Are we doing Sixers? That was cool though. The Eagles.
What's your take on Bad Bunny?
He's doing the
halftime show.
Oh man, it's a sign that I'm getting old. I had no idea who that was.
Jacqueline went to his concert in Puerto Rico, so talk to her.
I'll send you some good songs after this. Totally. Thank you so much for coming on today. It was such a pleasure.
I appreciate it. Thank you.